Let me tell you about a really interesting opportunity that I'm looking at in the market today. This was pointed out by one of the comments on the channel. Now, I know that we could be facing a recession. It could be as bad in the US as 1.5% to 4% of GDP, and that is getting or looking increasingly worse by the day. Even if there isn't a default, this could very easily end up in another recession that looks as bad as the Great Recession. Now, I know some investors, they like to invest in the growth stocks like Nvidia, perhaps an undervalued stock like Meta. When we look at the situation at the moment, only about 9 of the US stocks, those mega caps, have actually generated most of the market gains this year. What this essentially means is most of the market is down. Now, if we begin to look at a company like UGI, we find a company that has long-term stability here. It is both growth and income oriented. If we look here, I love this. They've consecutively paid dividends for 138 years. Now that is a very, 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 very long time. What does that mean? They've paid dividends through World War I, World War II. They've paid dividends through times where interest rates are as high as in the 20s. They've paid dividends through 24 bear markets, 29 recessions, including the Great Depression. This, my friends, is indeed a company that we can bank on in terms of these dividends. Now, having said that, they haven't been raising the dividend for 138 years, but they have been raising the dividend here for 35 years. Now, if you look at this over the last 20 years, dividends per share have increased by 7% CAGR, compounded annual growth rate. 10% compounded annual growth rate here for the total shareholder returns over the last 20 years. So this is a company that has an enviable track record. Okay, now when we begin to look at the company itself, there's a lot of business here. Now, it is a globally diverse propane and gas utility. It has operations in 18 countries, over 10,000 employees, and about 2.5 million customers. It's the second largest regulated gas utility in Pennsylvania and West Virginia. Now, regulators in the US have granted UGI a 10% increase in the basic growth rate through 2026, and they're heavily invested in this regulated business. And that's important to note as well. It's one of the largest propane sellers in some European countries. Okay, now as we begin to look at fast graphs, we get this picture here. We can see that in the orange and blue, the earnings have been mostly increasing year over year. There have been some dips from time to time, and as we can see here, that dip in earnings is correlated to quite a strong decrease there in prices for the stock, particularly heading into the pandemic period. Now that hit a price to earnings of about 10 times. Here in the Great Recession, we were down into the single digits at just under 10 times. And here as well, we see the blended PE currently is into the single digits as well, just. And we can see this steep sell-off here into 2023, which appears to still be ongoing. Now, some of the benefits here gives us a dividend yield of 5% and quite a nice compound annual growth rate in the dividend as well. Now, what that means is an investment here at these prices is going to deliver reasonable income, and it's going to be income that continues over time. Now, as we note here, the S&P credit rating is absent, so the company itself doesn't pay for a credit rating. But essentially, if we look at the underlying companies that do have credit ratings associated with those bonds, essentially I'd say that they're equivalent to about a BB plus rating. When we look here at the past performance, then I want to look down here at the dividend growth rate. Now, as we can see, there's been some periods here where there are double-digit dividend growth rates, even in the recent past heading into the pandemic. But at the moment, most of the growth rate here seems to be at about 4 to 5%, which is probably what we'd expect to see. We can see over the last 20 years as well, the compound annual growth rate is more or less equivalent to the S&P 500. But if you look at the total dividends paid, you're talking about twice as much of this being returned in terms of dividends, which you can then reinvest back into the company, which is indeed quite nice. Now, when we begin to think about what this means in terms of ability for analysts to estimate what's going on, we can see the 2-year forward, analysts get it right about 92% of the time. Not perfect, no, but I think good enough that we can rely on some forward estimates here for the analysts. Now, it's not as easy to estimate as some of the utilities. As we saw, they have international as well as domestic US operations and operations in quite a few different segments as well. The long-term growth prospects here. So we've got several analysts here suggesting that long-term earnings will grow by about 6% per year. Now, if you take that 6% per year earnings growth, throw in that 5% dividend growth, and you're talking about a double-digit 11% returns per year. And I think that's quite a safe and reliable level of returns that we could be expecting. And this is very similar to what it's actually managed to deliver in the past as well. So look, I can't make any promises with this, but this is one that I've been buying heavily in the last several weeks as well. Now, if we take this past price to earnings ratio here of about 16 to 17 times, and we assume that prices return to this price to earnings ratio, and we assume that analysts have it correct in terms of what these earnings will be in the end of the 2025 financial year, then we could be talking about 122% total rate of return from where we are today, or about 40% per annum. Now, is that good? Yes, there's probably stocks with higher annualized rates of return, but here we're talking about a rate of return, I think, with relatively high dividend yields. We're talking about a utility company which has a strong regulated section. We are talking about some long-term growth prospects here, a company that's paid dividends for over 100 years, my friends. So this is, I think, a really nice opportunity, and that's one of the reasons why I've been looking closely at this opportunity and beginning to invest more in it heavily in the last couple of weeks. So despite the fact that I think overall the market's down, this is definitely a company that I feel comfortable purchasing now. So let me know, is this on your watch list? Is this one that you've looked at? Do you like utilities? And if you do like utilities, is this a utility that you would consider investing in today? Let me know. Hit me up in the comments down below.